Fast forward to 2025 now. Geez Louise, we'll be in business next month for 11 years. We've raised over $40 million on 33 projects, and we've hit or surpassed our returns on every project that we've had.
The military taught us discipline, it taught us leadership, but it never taught us how to really build wealth and income. This is the Active Duty Passive Income Podcast, and I'm your host, Mark-Ian Sitch, a United States Marine turned full-time real estate investor and educator. I'm bringing you the most successful military, veteran, and military spouse real estate investors, entrepreneurs, and industry experts to break down exactly how they did it, so you can too. Yo, ADPI, here we are. We're back, and this is interesting. This is going to be a back-to-back episode with another, yet again, awesome guest. And we're going to be talking about, similar to last time, not only all the sunshine and rainbows of business, not only all of the, making the money all the time, but really kind of like the stories behind the scenes, some of the times when things didn't go as well, some of the times where I think personally you can learn the best lessons that will help you make those green dollar bills or those zeros pop up on your bank account. I know that my style isn't always talking about like the money particularly, because I guess I don't like to fixate it on it too much, but I do believe that that's the energy source that helps us buy our time back with our families or whatever is important to you. So it is important that we get to the brass tacks with these stories. We've got John Rubino on. Thank you so much for coming on. I can't wait for you to share your story. I can't wait to dig into, some of the failures, some of the successes, all the in-betweens, your military service, how your mindset got you to where you are. So let's jump into it, John. Thank you for coming
It's a pleasure to be here, an honor, and thank you so much for having me. And I'm glad to be back. It's awesome to see you and to chat with you today. And it's so much fun to be able to talk to you and your listeners. Born and raised in Brooklyn, New York. Was there for first 22 years of my life. Came from a pretty small family, immediate, but had a larger extended family from my mom's side. Italian American, so very close. A lot of my uncles and my aunts and family were business owners, including my dad. My dad served for 7 years in the Marine Corps and was also in Korea for a few years. Yep. He's a grunt. He's a devil dog. He passed actually 2 days from tomorrow, so tomorrow is his 2-year anniversary. But you know what? He was thank you. He was my hero. I looked up to my dad, as I think everybody does. I still do, and I talk to him in pictures, and I pray to him and talk to him, and he really kind of gave me that courage, enthusiasm, and energy to want to get into business. But my first passion was to be in the military, and so I went to a military high school, Catholic school first for 8 years, another 4 years of Catholic school at a military high school, military college. Top Gun came out, and I was like, that's what I want. That's what I want to do. And then, just my dad's, story and his history and how proud he was when he talked about his service. So that was a no-brainer. I became a naval aviator right out of college, moved out of New York, did my flight training down in Texas, got my wings. I was stationed in Jacksonville, Florida for 4 years. Got to deploy overseas to the East, the Med and the Levant region right before the Gulf War. And I was an instructor pilot for a few years. I did an overseas tour for 3 years, serving for the Commander of Naval Forces Europe. And then got back here to DC back in 2011, working right outside the Pentagon. And I retired from active duty service in 2017. So, you blink and 20 years goes by. It was an amazing 20-year journey. And this is the big fat plane I got to fly mainly in the military. That's a P-3 Orion. But then I also had some time to teach kids how to fly aircraft coming out of college, which was such a great experience. And, the soft skills, the skills, everything I learned in the military just transferred over so nicely into now my business. And so about 10 years into my Navy career, I started to get involved investing in real estate. Some of my friends in the military and my friends who are pilots were talking about it back in 2000, when this new fix and flip idea was going on. And so I started investing with some friends. I bought some new construction homes down in Southern Maryland around 2004, 2005. And I did real well. I made $60,000 on my first transaction. I made 40,000 on my second. Sold my primary residence. I made
Nice.
125K on my primary residence in just 3 years in equity. And
There
so
you
yeah, I
go.
took that nest egg and I gave it over to one of my closest friends who was starting his company. He was getting out of the Navy, and he's now an $800 million development company. And so
Holy cow.
I was investing with him for 7 years and getting a 10% return on about $200,000. And so over that time, I was not only getting a return on my money, but I was also getting an education on how to learn how to invest, how to do due diligence, how to
Right.
read performas, how to look at decks. And so the education was growing. And then when I got to DC in 2012, I said, I don't think I want to work for the government after I retire in 5 years. I think I
Mm-hmm.
want to take what I've learned and I want to put this into practice. So the business I stood up was, kind of talking with friends and family, bringing them on as investors, and then together with my capital, investing on real estate deals as LPs, as private money, as private equity. And so,
What kind of deals are these, like
yeah.
single family homes, apartment complexes? What are we talking here?
So my buddy was doing the buddy I was investing with over that 7 year period was doing condo conversion, new construction development, multifamily, mixed use. And so my goal was always to invest with him and bring in the larger scale equity he needed, and becoming like LPs or co-GPs on his deals. But we started with single family residential properties where we were bringing in, 70, 80% of the money with the borrower bringing in the down payment. And we were just doing, a joint venture agreement with some legal docs. And we were splitting profits 50-50. So it worked out really well. And it really allowed us to cut our teeth into in the industry, take some bumps and bruises early at kind of a lesser of a punch, and then really get into those larger equity deals. So the equity deals started at 500,000, then 750,000, a million, 2 million. And as we started going up the chain of that amount, we started bringing in the legal side. We outsourced SEC attorneys to put together our legal documents, our private placements, our subscription agreements, and all of the documents that are needed to register with the SEC. We started going out and raising capital from public accredited investors. So we had this business, and the business was really simple, and it still is. Bring in investors who like real estate, who want to invest in real estate and like the deals we have with our terms. Work through us to stand up single purpose vehicle type investments on one project or two projects max under a private placement. And then rolling those funds together into a partner deal with sponsors we've already vetted, we've already done our due diligence on. And the deals that they have, we cut our teeth on to bring in the capital needed for their deals. So fast forward to 2025 now. Geez Louise, we'll be in business next month for 11 years. We've raised over $40 million on 33 projects, and we've hit or surpassed our returns on every project that we've had. Knock on wood. So yeah, it's a great business model.
Wow.
Yeah, yeah, and so
Wow.
it's been a lot of
Okay.
fun.
I need to dig into a lot of that. First of all, a lot of our, because, okay, so we have the full spectrum of different kinds of investors coming in. Everybody from like, hey, what is this real estate thing? Is it really better than stocks? And then those that know that they want to go all in. So everybody, and some people that have bought a primary residence, some that have not, some who want to do fix and flips, some people want to do wholesaling, some people want to do apartment complexes, the whole thing. Somebody just wants to house hack their VA loan because they know that that's going to make them a millionaire over the long run. So like, we got everybody. And so you said a lot of really, some of them technical things like, and I have to like, trust me, I have to remind myself, I'm like, well, LP, maybe somebody doesn't know what that
Yeah,
means.
yeah, yeah.
Private placement, maybe somebody doesn't know what that means. So
Yeah.
I want to take an opportunity and help you educate our listeners on like, what does all that mean? So, guys, if you're listening to this, I think ADPI has tried to do a better job of helping you find what path you want to take. And I'm going to give you some insider, what's the word, baseball, whatever the idiom is. The way we see it now, I used to try to separate people between like those that are interested in short-term rental, those that are interested in traditional like long-term buy and hold residential, and those that want to go do syndications, which means like, guys, if you're hearing that word for the first time, but basically it means you're raising capital from investors and you're doing like a special structured It's kind of like a joint venture, but you're doing that with the investors. They're bringing in the majority of the money. Anyways, it's all, is sanctioned under the SEC. You have to file a bunch of things with special attorneys, all that kind of stuff. And so we used to try to separate into those three camps. And then we tried to separate it into, okay, maybe it's just residential versus commercial, right? And then what we realized is we're like, wait a second, it's really more based on intent. Like, what do you want out of this? Do you want real estate to be your full-time, your all-in thing? That's what you want to do. Maybe you're ramping up and you're starting while you're active duty, kind of like you were, and then you jump into it like all the way after the military, or even like, that's your transition plan. Like that is your entrepreneurial journey. Or maybe you want to buy a home here and there at a duty station. You want to maybe do a project, maybe a burr, a flip once in a while. You want to, I'm not saying, I don't like the word hobby. Like it's not a hobby, but it's definitely not your all in thing. Right. And so you are obviously kind of like figuring it out early on, and then it became your all in thing. It sounds like, right?
Absolutely.
100%.
I agree. Absolutely. You're absolutely right. I mean, you've got to find your passion. If you like real estate, what's drawing you into real estate is that you want to own, you want to, manage a property, you want to have oversight control, or is it, hey, I want to continue to work my 9 to 5. I like my job, but I do want to invest, and I want to learn how to invest maybe with a lot less hands-on, which gets you into the passive side of the business. Right. So it just depends. I mean, you got to find, if you love real estate investing, what does that mean to you? And I think that's a great idea. Yeah. You've got to sit down with a pen and pad, or just, go outside with a beer or bourbon and just kind of sit in some nice warm weather and say, hey, what do I want to do? What's the thing that's drawing me to this? And then really capitalize on that passion.
Okay. So for the sake of this conversation, I think we can draw it a lot on focusing on those who want to go all in. And guys, when you're listening to this, just know, like we also have our mentorship and program where it's just, if you want to just get into real estate and it's not an all in thing, definitely check that out on our homepage. But like for those that want to go all in, let's talk about that, John.
Sure.
So at ADPI, our all-in system is apartment complexes, like multifamily all the way. And a lot of our students, they use that as like a starting off point, and they realize, no, I want my niche to be mobile home parks, or I want my niche to be storage facilities, or I want my niche to be, boutique hotels, right? But like the starting off point, I think it's more of like a mental thing. It's easier to just grasp, oh yeah, an apartment complex. Like everybody, like most of us have all had to like sign a lease, at a unit at an apartment complex of sorts, right? And so that's like an easier, and the numbers are more like kind of like, I don't want to say standard, but it's like, it's understandable, right? Yes, there's utilities, there's electricity, and so that's what we like focus on. And we actually, we have a lot of our members that, you basically are the type of people you work with. They are operators, right? So you know what's what. And so you go to these operators, also known as, guys, general partners, and you vet them. How do you vet these general partners? How do you vet them to see if like there's somebody I want to entrust a passive investor's money at? Because you're putting your name on the line when you're telling somebody else you should invest with these people, right?
Yeah, absolutely. Yeah, I mean, obviously the first and most important thing is experience, performance, and they're in a location that is my target location, right? So there's got to be a little bit of experience there, especially now, given the challenging times we're in. And performance, we want to make sure that they're a well-performing group, and if they've had some struggles, that they can walk us through what happened and how they got through it, right? I mean, everybody struggles, but I think that when you could tell folks how you got through it and how you learned from it and how you continued forward is very important. We spend as much time as we need on new sponsors. If it's 6 days, 6 weeks, or 6 months, there's no rush. So I want to be able to sit down across the table from the executive level, the C-suite, the CEO, the COO, the CFO of the businesses. I want to understand their concepts, their strategies, what they're doing, and then how can I add value to their business, right? And so that's very, very important to us. And we've got to have a good line of communication. There's got to be kind of, feedback on both ends. When they send me an email, I want to respond within 24 hours, and I expect, the same thing from them. So that sets a good foundational precedent that this is a good group to look at. And once we get through the initial stages of our due diligence, performance, experience, let's look at a few deals. Hey, here's our terms and what we bring to the table. Would they fit into your deals? What kind of deals? And then just understanding who their key people are in their organization and who they work with. That's very important to us. Like you said, I'm going to hopefully introduce this company to my 300 or 250 investors. I've got to feel like I am like on board, taking off my business owner hat now and putting on my investor hat, because I'm going to invest in these deals, to my investors to say, hey, I feel really good about these guys and here's why. So that's very, very important as a start. And then looking at their deals, like, hey, let's look at a couple of deals. Like, give me a performance versus forecasted versus actual. How well did you do? Where did you struggle? What were some of the things you learned? What are some of the things we need to take into consideration? How does your tax process work? How do you do your tax documentation? How do you do your reports to let us know how projects are going? Are they quarterly? Are they monthly? What are you adding? So these are all the things we kind of hash out on the front end. And I've got my checklist, just like in the Navy, of each business when I look at phase 1, 2, 3, 4, what I'm asking. So that's really important. And like you said, it's got to be a good feeling, because those folks are coming to my treasure of investors, my family of investors, and I've got to feel as good as I am. They have to feel that same way.
Yeah. I love that. First of all, I love checklists. Although I actually used to hate checklists because I was a pilot as well. And I was actually I was a computer science IT guy before I became a pilot. So I fell asleep in Calc 2 and still made an A. And I'm not saying that to show off, but that's how my brain worked. But I would go to history class. I remember I got a C in naval history. Like I couldn't memorize things and just spit it out on a paper, or also English is my third language. So really second language. So it's like, I writing papers in using big words for my professor, who's a Princeton grad, was just not up to standard. I mean, those were bleeding. But what I have come to find out as a business owner, now I get, like, that is if you can grind it out and be consistent in the basics of a checklist, that changes the game. That's going to completely change the game as far as compounding the success you're going to achieve. So I love hearing that. I'm like, okay, as soon as I heard checklist, I'm like, everything else you said totally makes sense to me. But I'm like, okay, the fact, guys, here's a clue. You're listening to somebody who has raised over $40 million and he still uses a checklist. That's important. Like, you don't, it's like, I mean, in the aircraft, like, my instructor had no ego. If he missed a step, I better tell him. He would check me if I'd tell him. Right? Because that's our mutual lives together. So here you are, your co-pilot is basically your investors.
Yep.
You're like, guys, we're in it together. We're following checklists, because no matter how much experience we have, we don't want to miss, checking a certain thing on the due diligence of a property. So I want to hammer that home, because I do think that's a very important clue that you're giving everybody.
Yeah.
So,
absolutely.
okay.
And that checklist gets updated. Like, just like when we learn new procedures in an aircraft where there's not a procedure for it. And when we get through that procedure,
it's your
NATOPS. Your NATOPS. I mean, we say it literally sometimes, but NATOPS sometimes is written in blood, because we've lost lives from procedures that had to be rewritten or had to be updated. So, as I go through a deal, if there's a stumble or something I learned, like COVID, and like, now how do we kind of take that into consideration? And that gets added to the checklist. That's another step. We may not use that for every deal, but it's on there just to remind us.
Yeah. And so, and we're going to get into, like, some of the things that helped formulate your checklist further, so to speak.
Absolutely.
But a little bit more education for a second, a little bit. And guys, pardon me if you hear my kids in the background. What's going on is I have I don't know if you can hear them, John, but basically my studio is a renovated detached garage. It's awesome because I work a few steps from my house. I get to make this place into whatever I want it. But it's spring break and my kids are running around in our outdoor playground going crazy. So pardon me, but that's the entrepreneurial life I'm living right now.
That's awesome. So, enjoy it.
Thank you. So let's talk about a little bit more into the GP, LP, how all this process works. Yeah. So you called them sponsors, you called them
Operators,
GPs.
GPs,
We would call them operators. We call them
management.
Key principals sometimes, even though that means something else. But like, okay, long story short, guys, like the way it works is you have those that put the deal together, raise money, and get it to the closing table, execute a business plan, and then exit the deal, right? Yep. And by exit, it could be a refinance. But point is, you're the one who finds it and then gets it through full cycle to make sure that the investors get returns. The investors are what we were calling earlier LPs, right? So those are the limited partners. They're not the GPs, the general partners. They're the limited partners because they're limited in what they're able to participate in, right?
Yes, that's correct.
How do you explain that to a new limited investor? Like, because everybody ends up investing in the apartment complex together, but like, how does somebody decide whether they want to be a limited partner or a general partner?
Yeah, and I think it just depends on the structure of the deal, right? So you've got to sit down and you've got to look at what's called the capital stack. How is the money brought into the project? Of all the total costs of everything that costs money, where's the money coming from, right? So it's always going to most likely start with your lender. They're going to have the biggest chunk of the pie, and they're going to usually have the highest, the least risk when it comes to the property. So they're going to be king of the castle. They're batting first in the batting order if you're playing baseball. And then you've got to figure out, where you fit next in that money order, right? If it's a big deal, let's say $100 million deal, you're typically going to have a 60% bank or lender, so that's $60 million. Then where's the other 40 come from? So now you've got to see what's coming in behind the debt, what kind of equity is coming in behind the debt, typically equity, and how much of the equity is coming in and where that's going to sit in your capital stack. But typically what happens is after you have the lender come in, your next kind of tier of capital stack and equity is called that limited partner group. And that group is going to be made up of private investors. It may be maybe institutional equity like pension funds and real estate investment trusts that are bringing in institutional capital. But typically that's where the independent investors, the private investors that are coming in for money are going to sit in that second position. And so for that, they, like you had mentioned, they're limited in the mindset that they don't have a lot of control. They can't tell you to paint the wall blue over black if that's what the sponsor or the person running the project is going to do. They can't control who management is going to be. They can't control who the architect's going to be. But they do have some limited power to come in and to at least get their kind of concerns raised. The nice part about that is that, the only risk typically that a limited partner will have is the capital they bring in. So worst case scenario would be you lose your money, right? And that's, again, associated with the term limited. You're limited on your liability. You're limited on your decision-making power. You're limited on the ownership. Typically, and please make sure you check for this when you do get into a deal like this, the limited partner does not have any recourse on the debt that's required. So if you have a recourse loan, meaning that someone's signing on that and saying, hey, if I can't repay this note, this debt, this loan, you can come after me personally. Limited partners do not participate in that, but that is definitely something you got to check for. So again, the only real risk is your money. And so that's something you've got to be willing to accept given the type of deal it is.
Yeah, that was an awesome explanation. Thank you so much. So,
you're welcome.
Yeah. So, and I think a lot of people, I think the typical thing is like, okay, lawyers, doctors, high income earners, they want to diversify into something outside of this, stocks, bonds, mutual funds. They want to put their money somewhere else that they might be able to double their money in like 4 or 5 years instead of riding that ride of the stock market.
Right, exactly.
And maybe they want some tax benefits. They want, there's so much other stuff that comes with real estate, as we all know. So that's maybe why they are interested in this. And that's why, as the capital raise or why you were able to raise so much money is you know how to identify the right people that are probably foaming at the mouth for this opportunity. Like, yes, I want these deals as long as the hardest part is the vetting, but they have you as the kind of like the intermediary be like, look, I don't want to tarnish. You're like, I don't want to tarnish my reputation. Like, look at my track record. I only invest in people like this. I'm going to be able to vet them better than you ever will. That's right. Let's do this together.
Yeah. And they typically either don't have the time or they just, again, not taking away from anyone. They just are not around it a lot. They have maybe some general ideas, but you do also have investors that are like, forget it. They're just like tearing it apart and they know every little thing about it. But most of the investors are, like you said, high income earners. They have a business. They're independently wealthy, or they have their job. They're a doctor. They're a physician, a lawyer. And so they don't have the time to find the sponsors and the deals. So our goal is hopefully to bring that to them on a silver platter with 80 to 90% of the work already done so that they can go through it, maybe spend a few hours, get their questions answered, and then come on board to potentially invest.
Gotcha. So you're a capital, would you call yourself a capital raiser?
Yeah, I'm a capital raiser. I mean, the term syndication would be appropriate for me as well. I do syndicate deals because we do have a public source of accredited investors that work with us. And for your listeners, an accredited investor is someone that makes either $200,000 over the last 2 years if they file a single, or $300,000 if they file a joint, with the expectation of the next year to be at that same income level, or they have $1 million of net worth, not including their primary residence. That's an accredited investor. So they can then typically have access to different types of deals that are available for syndication or for private placement investment.
Yeah. And when you guys hear private placement, that's what we're talking about. These syndications, you have to establish a private placement memorandum with an SEC attorney. Typically does that. They file what's called a Regulation D. They determine typically if it's going to be for accredited investors only. I'm not going to get into all the weeds, but anyway.
Yeah, it's very easy. You just look it up on the SEC website. It'll dictate it for you as well.
Right.
Yeah.
Kind of.
Yeah, and to your point, and so, I think no, just real quick, I think it's great that you bring that up.
Yeah.
And again, I'm not trying to solicit from it all, but Robert Kiyosaki's Rich Dad Poor Dad, if you haven't read that, that's to me one of the top 3 books to read, and that really goes.
The Purple Bible.
Yeah, exactly. The guru. I'm waiting for him to open up his own university so I can go and bring my boys. But yeah, that's the book that will walk you through the kind of the insights into that. So that's a great book, as you know.
Yeah. Okay. So I'm curious what you think about this, because I know we're about to get into your challenges. Like I said, I think that's going to be some great talking points and lessons learned. But I love having somebody as experienced as you are to educate our listeners on this, because the most valuable thing I feel like ADPI can do for our listeners is help them really be confident in their path. Amen. Like a lot of the times, like our education, by the way, at ADPI is all focused on, it's not so much like when we build our syllabus and the actions required in the syllabus, it isn't like, oh, that's the next logical step in the checklist. It's more like, what's going to build your confidence the most? Because that's how we think of the dominoes are going to fall. You're actually going to take the action. The probability of you actually taking action, which will increase your likelihood of succeeding, is if you're confident in the next thing you're doing. You're not going to be stuck in, and even if you're like an introvert underwriter, you're not going to be stuck in analysis paralysis. You're going to want to take the next steps because you're confident. So the way we think about it is we tried to initially come up with a team structure. And what we ended up doing is having, because I know you want to talk about teams, so I'm really interested in what your thoughts are on this, is we realized, okay, every syndication needs to have a method to the madness around the team. Not only do you need to then split up the equity, okay, well, what do you get if you do this? Or what do I get if I do this, right? The GP splits. But if you want to build momentum and continue gaining confidence, what we teach is the first step is building the team. Not even your external partners, the property managers, brokers, all that kind of stuff, but who are you on the GP team with? And so the way we call it the core 4. Okay. So that's our structure, and we love it. And we've seen it be very successful. It doesn't always have to follow this, obviously, but we know we need to have a framework that you can bolt your personal situation on. So we talk about, okay, there's a capital raiser, which a lot of times we teach that's a ideal person to become like the investor relations after closing. And also you can't just be a capital raiser, although there are a ton. Anyway, if we had Mauricio Raoult on, he'd give us a whole lesson on that.
The best there is. Yep. He's awesome.
Yeah. He actually comes into our program during one of the 14 weeks and just goes ham. His shorts
on YouTube, they're like 15 to 20 seconds. They're the best. I mean, they're just quick hits. What he talks about, the YouTube shorts.
Quick hits, but they're like golden.
But they're golden nuggets. Yeah, exactly.
Yeah. So now ADPI has him in our back corner because he's helping out our members. So we have the capital raiser and also investor relations, and then we have the deal. We call it deal acquisition specialist. Some people call deal finder, deal sourcer. But I almost look at that as like kind of the quarterback a lot of times, and eventually like mentally they turn into like a team lead sometimes because they're like your network, you're advertising, you're standing up for your team. You're finding this deal, you're pitching it to brokers, sellers, whoever, and vouching for your team. So you kind of have to think that way as like, no, I because your reputation depends on the success of your team, actually closing on the deal when you're talking to a broker. Cause that, you don't want to like fail on that. That broker's never going to talk to you again. Right. So we have that person like that. They put all the pieces together, get it to the closing. Then we have the underwriter or deal analyzer. So somebody who's like the numbers person, they're really good at spreadsheets or whatever software, and they basically build the business plan, right? Like, hey, we need to renovate this many units to get to this type of rent at this time, and this is what the internal rate of return is going to be. This is what we can get of our investors. And then we liken it to like the sergeant major or the senior enlisted advisor. It's the asset manager, the person that's making sure they're like beating the drum and they're executing that plan, right? And so when you jump into these deals, do you represent yourself as like, because I'm guessing you probably jump in and do a little bit more than maybe just the capital raise, right? Like with your company, or how do you do that?
Yeah, everything you just explained and all those people that you explained, I need to be able to know how that works. It's not my primary vertical, but I've got to understand a lot of that because I still have to have accountability of those things. So like you said, exactly. let's take a step back, when you're out there with that bourbon or beer and you're writing down what you want to do. And when you finally get that goal or you got that thing that you want to do, like you said, the next thing out of your thought process is, who are the people in my network? Who are the people that could help me get there? Because those people are going to be the most important in helping you to get started on your path, maybe even walk with you on your path, help you over the challenges from what they've experienced. So yeah, putting your team together is the most important thing after you decide what you want to do. So if you want to be a multifamily manager or sponsor or operator controlling a property, yeah, I would suggest trying to find some of the folks in your local area that are doing it and riding, as a shadow to watch them do it. So you can kind of learn from them. You've got your group at ADPI. You've got folks that have gone through this process. Pick their brains. Spend time with them. Ask them if they could mentor you. So yeah, soak up as much as you can to learn. And then, start to, look at what are the things out there that I need to put together and put together your outline of how you want to tackle your projects. And like you said, when you have those people identified, you can then fill in the tasks that you need to do, or there's bigger ticket items you need to do with those people. Who's my attorney? Who's my broker? Who's my capital raiser? Who's my property management company? Who's going to do this, and all of those things. And so you've got the tasks, and then you've got the people that are going to be able to help you with that. So, real estate's a team sport. Everything's a team sport, in my humble opinion, but it's a team sport. And who's going to help you more than the people that are in your network, or you're at your wealth building course, or at your ADPI group? Those are the people that are going to help you the most because they want to see you succeed. And then they know that, you're going to also help them. It's a two-way street. You add value to their business and they're going to add value to your business. So, you're so much far ahead than someone that's just trying to do it on their own, or someone that doesn't have those resources.
Oh my gosh.
It's so important. Yeah, it's really, really key.
Well, it kind of goes back. I mean, and again, remember I was talking about like our thought process is the confidence part. Not only like functionally, it does make sense to build a team, but because for example, we're about to be under contract on a 72 unit. Like the reason I was confident. And it if we have time later, I'll tell the whole story about that. But the reason I was confident and was able to get that deal, have the LOI accepted, we're at the last round of red lines. It's about, we're about to get into the thick of the due diligence, was because I had a team. So like my confidence was high. Like I remember I called the broker. I was like, I don't care what you have to do. I want this deal. Like I've never spoken, like I'm at that point where I'm able to talk that way because I know I'm not going to let that person down. I know I have a team behind my back. I know I can get it done. And so like, something you said I thought was awesome. You're like, you have to like, sit down with a bourbon or whatever. You got to think what you want. So like, for example, in our cohort programs where we do this over 14 weeks, so you can learn all this, is like you take a personality test, you learn about all the different roles, you think about your personal goals, and you really like kind of like, okay, what kind of value can I provide to a team? Because that's the first step in building a team around you or joining an existing team, right? So I'm loving this conversation, John.
Man, me too. Oh yeah, this is great, and you're hitting so many great things. And look, I want to capitalize on a point you brought up too, is that you've always got to be thinking about your professional development, right? There's always got to be ways that you can learn how to take your inner superpower and really grow that more so, and then identifying areas where you can improve. So I'm a big fan of books like The One Thing by Gary Keller, Atomic Habits by James Clear. I'm reading Hidden Potential by Adam Grant. These books, they're books that, like you said, I was thinking about The One Thing with Gary Keller with the dominoes falling. Gary has a whole chapter on that. So like these are great books because they're going to motivate you and they're going to find your inner power. So when you're building that team and you got that pad, put on the left side kind of two columns, and on the left side put my value, bam, 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 and then what do I need, bam, 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 bam. And that's going to also help you say, hey, I've got value I can bring to the table, and then these are the things I need to be brought to the table. I'll give you a great example, too. One is I'm not a good tax guy. I don't like taxes. I'm not a big fan of, I know depreciation and all that fun stuff, but my CFO is my accountant who I've known for 15 years, and he's an enrolled agent. So he does the balance sheets. He does our financials. He's got the QuickBooks. He loves that stuff, and good on him. And I understand that. But anytime an investor calls me about taxes, they know not to call me anymore. They just send a CC to me and they email my partner because he's going to help them with their taxes, and he's going to be able to walk with them and give them the support to get through the tax returns we do. We do all the tax returns for our investors. So that's another added value for us. The second example, and this brings up a good point, is there's a story about Henry Ford. These guys walk into Henry Ford's office, right? And they start asking him all these questions about his business. And Henry Ford takes a deep breath. He hits his intercom and he says to his secretary, "Bring me Jim, Mike, Pete, and Joe." And they come into his office. And then they're standing next to Henry Ford, and those guys, and he says, Henry Ford, to those guys asking the questions, talk to these four guys and ask those questions. Bam, 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 bam. They answer the questions. Those guys are good. Henry Ford continues to run the company. So he's got the people. He's got the resources. He's not going to take a shot at making, a guess. He's going to bring in the people he has that are already on his team that can answer those questions for him. So yeah, it's really important.
Gosh. Yeah, there's definitely a lesson there. And but how should I say this? Like actually Alex Hormozy put it very well. And I think that this speaks to the continuum of building your business, is that like you hear stories like that, right? And I think that's so valuable to just like, cause it teaches you a lesson. But at the same time, I think what I see actually is kind of like, because a lot of times people just like they speak about these stories, like how Henry Ford did that, is they almost like bite off on that and they think that's how it is day one. So like Alex Hormozy says, he's like, okay, so he's like, yes, I'm talking about things I'm doing right now at the top of Everest, but don't think that what's going to get you to the top is what I'm doing right now. Like awesome. You're not going to day one, you know what I mean? So you're not going to day one have this staff or just find the right people out of nowhere and be like, oh yeah, they do all this stuff. I sit back.
Yeah, exactly. So, it's so true. I mean, it's like, not, when you think about it, it's a great quote. Another good book, that a phenomenal book, Tribe of Millionaires, the Go Abundance guys, Chris Osborne, Padabon. They talk about how everybody is so impressed that when you get to the top of Mount Everest, but they never ask how you got there, right? And that's the
Right.
most important part, is like, the struggles, the successes, the setbacks that I had to get there. And that's what you really need to focus on, is like, look, yes, this is an amazing accomplishment, but look what I went through to get there. And that's when you learn. That's when you really appreciate the successes,
Yeah.
the victories that you make. Yeah, it's so cool, man. Yeah, really, really cool.
Yeah. And so here's an interesting question. As you're building out teams and you've been doing this for years, and what is I'm curious, because let's dive into some of the
Yeah.
challenges and lessons learned. I'm curious because I know the answer for me. Did any of those challenges that I'd love for you to share in as much detail as you're comfortable, did any of those happen, or was the nexus of them, the beginning of them, or the core of why they happened because of people? Maybe the wrong people.
Good question. Very good question. I'd say a little bit of both. Some had to do with people. Some had to do with situations that were outside of my control.
Okay.
Case in point, when we started our business in 2012, we're just coming out of the '08 financial crisis, and we had 7, 8 years of golden years of just success and just amazing,
Yeah, yeah,
amazing,
yeah.
amazing growth. So, and I'm still in the military. I'm kind of doing this part time, but I'm getting paid every 2 weeks, and I'm making money with the business, and everything is just going into the business. So it was like, wow, this is awesome. So I'm like on autopilot now, and I'm almost like falling asleep because I'm like, this is great, And then all of a sudden, March of 2020 comes, and we kind of knew there was going to be a correction, but we didn't know it was going to be jumping off a cliff and just the nosedive that everybody took, and that was just, first it was like numbing, then it was just shocking, then it was just like, what the heck? And to this day, for over the last 5 years, we're still feeling it. And I think we're going to continue to feel it for a few more years because of what our country experienced. And I think the biggest lesson I learned out of that is that there are things that are out of my control that I can't control,
Right.
but
Right.
but I've got to try my best to be prepared for them, right? So, what are the things that I know that I can't control that are out in the environment that have an impact on my business, but that I can see, I know they're there, they're a risk, but that I can deal with that. And I'll be totally frank with you. I had a lot of challenges mental health wise with some of that because you're just so anxious. You've got a lot of money out there. You've got a lot of people depending on you, and it's very hard. There's a lot of a burden. There's a lot of stress, anxiety, and so yeah, I had to take a break for about 6 months and just kind of recapture myself because there's no we without me. I know there's no I in team, but you've gotta be
Oh, I haven't heard that
good.
yet.
Yeah, you've
Yeah.
got to
That's
be
very true.
healthy to be able to do what you do. If you don't sleep well, you don't eat well. If all that's messed up, you're not going to be able to do anything. So I had to really relearn how to approach things that I may not necessarily have control over. And it's a humbling experience. My faith, I'm a Catholic. I had to really just take a step back and just say, hey, I need help with this, Lord. I don't know how to do with this. I've never done this before. And I'm expecting to be the best at it. And there's a lot of humility. There's a lot of challenge and suffering you go through. But I'll tell you what, I would go through that again 100 times if I had to, because it's made me a better person, a better business owner, a better father, a better son, anything you can think of. It's just made me better. And, that's the hard part. It's a great saying one of my priests said. He's like, the tea bag doesn't release the flavor of the tea until it goes through the hot water. So I mean that's so true.
Oh my
Like we
God. There you
can't
go.
we can't
Yeah.
really
Yeah.
see our true potential until we go through adversity. We go through challenge, and so it's either fight or flight, or hey, I'm going to take on this challenge. Yeah, it's going to suck. Maybe I need to go for a walk and just take a deep breath and cope, but I'm going to get back in the fight. I'm not going to give up. I'm going to do everything I can. And then again, reach into my bag of resources for the people I know that could help me. And that's a pride thing too. When you try to do those things on your own and try to get through it, that's a pride thing. You got to just step back and say, you know what? I ain't going to do this on my own. I need help. And here's who's going to help me. This guy, that gal, this person, and reach out and get that help, because they're going to get you through it. And they're going to teach you things, and you're going to learn from them. And that's great. So now my mind has become problem solver, not run from the problem. And so that's a big thing. I've tried to teach my kids that, my boys, my daughter, to say, look, you're going to have a lot of problems in life, but you know what? You can handle each one of those problems, and you can get through each of those problems. And it's not going to be something that, destroys you. Believe me. So hopefully that's hopeful.
Yeah. No, it definitely, well, the funny thing is like, I relate so much to what you're saying, but if this was maybe 4 years ago, I wouldn't.
Same here. Same time frame. Yep.
And it's not even because what you're saying is so obviously true. It's so, yes, it makes 100% sense, but I haven't felt that pain I didn't feel that pain 4 years ago. I felt other pains, but not 7 figures of other people's money being on the line, and like literally on the line, like, not, my personal family's financial situation being like completely in my own hands. Like 4 years ago, I stepped out of active duty service. I did not retire. But I also just knew I wanted to do this full time. And I mean, I have a bad habit of just diving into things. Like I did that with our first apartment complex. It's just, I guess the world needs people that just like dive in sometimes, and people, and also the people that are really good at preparation and planning. And I try to surround myself by people that are much better at preparation and planning than me. And I'm even worried about saying it that way, because I don't mean that in a condescending way. Like that is a superpower that I do not have. And I constantly make sure that I'm evaluating how let's be honest, incentivize those people in my life to help me. And then I try to help them.
Amen.
Because we gotta manage those energies of each other. So
yeah, absolutely.
Gosh, I mean, 4 years, I remember listening to podcasts like this. That's why it's hard. I remember listening to podcasts like this, and I'm like, it didn't land. It didn't make sense back then, but I'm like hoping that people like, and it didn't land because here's what I'm worried. I'm worried that somebody's going to be listening to this. I'm just putting myself in my own shoes. Somebody's going to be listening to this, and there's no real way to prepare for adversity. I'll just, obviously, but I just I hope that maybe listening to this will help you prepare to just know that it's going to happen.
Yeah.
If you want to go all in, it's going to happen. And I'll tell you that there's like with one of my deals, I keep bringing up my memory care facility. That probably should have bankrupted 2 years ago, to be honest. And it probably would have affected my reputation with ADPI. It would have affected one of the apartment complexes that I'm partnered on with my parents, because I probably would have had to divest some of that equity just to make up for that problem. And it probably would have affected just my entire journey.
Yeah.
But like what I had to do was just, as dumb as this sounds, like just not quit.
Exactly. I was just going to use the word perseverance. You hit the nail on the head. Yeah. So, I mean, some specifics I can give you if you want, that really hit home. Getting a $2.5 million tax bill for the company when you're not expecting that. That's a big punch to the gut.
Wait, so was that a screw up? Like, did something get messed up?
No, it's just, and just real quick, we had a condo deal. And, when you sell condominiums, the IRS doesn't care that the money that you're making from the profit of the sale of each of the condominiums. We had 110 condominiums. Each of those condos, as they sold, obviously we were taking proceeds and paying back the capital stack. So the bank was getting paid first. We were paying back our notes. The IRS doesn't care about that. The IRS says you sold something, you closed on something, there has to be a tax that's paid. So what ends up happening is they give you what's called a phantom gain. And that gain is basically part of the gain that you would have to pay on your expected profit. So I don't know if you remember when the presidential election was going, one of the things that everybody was afraid of with, and politics aside, Kamala Harris was she's going to start taxing gains which people haven't made, right? We haven't sold that,
Right.
so there was going to be an expected tax on a phantom gain. And that's exactly what happened to us on that deal is we sold X amount of units of condos and we had to pay a tax that was accelerated for what we were expected to pay in the tax when we actually made our profits from the sale of the remaining condos after the debt was paid back. So that just was like, holy crap. And my personal side of that was $900,000 of capital gain. So that was
just
like,
to make sure I
yeah,
understand,
yeah, sure.
You were given the tax bill before the proceeds
Before the
were
proceeds,
realized
before we even
by
got
the
back to our return of capital, our investment capital. So here I am telling my investors they have to pay this capital gains tax on something that they haven't even realized. They haven't even gotten back their money yet. So it's like, holy crap. And even my enrolled agent partner was like, he was like, this is unheard of. I've never heard of this before. So when he says that, the guy who knows it all when it comes to taxes. So that was a huge punch to the gut. Another one was when COVID hit, we had 3 projects that were ready to start construction. Well, we were supposed to close on those 3 deals within a week to 2 weeks. Once COVID hit, the bank said, see you later. We're not doing this. And they pulled out. So we had 3 projects now that we had to sit on and that had no financing. And so we had to sit on those projects for 12 months. And we had to go back to the drawing board to restructure those deals from condominium construction, new construction to sell to now condo style apartments to rent. Okay. And that changed the entire scope of the project. So again, limited partner, I can't come in and say, no, no, no. I've got to be able to understand that and convey that to my investors and explain why. And explain why we've got to go an extra 2 years on the deal by coming out when we had planned. So these are different risks and challenges that are a result of COVID, but could happen at any time. I've got a deal right now, and I'll be brief on this one. I've got a deal right now that I've got about $3 million in. And we've got the bank that is actually going to sell the note to us at a discount, a huge discount, about 40% off the note, but they need to close in 2 weeks. So it's like, okay, so we had to run out. We found a lender to buy the note for the discount. Then we've got to put some equity together. And so I'm like all in on this deal because in the back of my mind, if this thing doesn't close by the end of the month, I'm going to lose $3 million of my investors' money. So it's like, again, now we're all in on this. And do I want to spend time panicking and worrying about it? Or am I going to go in and problem solve for it? So I'm problem solving for it. And we've already raised 50% of the equity we need. So we're there. God's making it work.
And that's where the momentum,
exactly.
And that's where the momentum starts. Cause you're like, look, we already raised this. You guys should definitely, the FOMO kicks in. You're like, yeah, should definitely jump on the
And I'm going out to my investors, my contacts, again, my team, I told you earlier, your network is your net worth, right? I mean, these are the people that I'm going out to, and they know who I am. They know the type of performance I have, and it's coming together, and it's just amazing to watch it as it's happening, because we're so worried about making it to the end that when you take a step back at the end of the day and go, geez, I just spoke to 150 investors today and I just raised X amount of dollars. Holy crap, that what a day. I'm gonna go have a bourbon now. So that's kind of the press, and just some of the things we experienced over the last few years.
So long story short, what you are saying is sometimes it is out of your hands, but sometimes it is people. Like I think I have with my same thing, that one memory care facility. It was exactly that. It was a combination. One part of it was I hired the worst contractors in the face of the earth because I was under the gun to get the deal closed, and we needed somebody to have an agreement with, and it was right after COVID and business was crazy. Then the other side of it was that first year of this SBA loan, which was my first time doing an SBA loan. First 12 months were a floating rate.
Oh my gosh, yeah, just crazy.
I closed in April of 2022. No stress testing on the underwriting prepared us for what came.
Nope.
That interest, our payments doubled. It was bananas, and I couldn't even fathom how high those like mortgage payments were.
Yep.
I couldn't understand it. I was like, I don't know what I'm going to do. Like I literally couldn't even wrap my head around the dollar bills going out every day in interest.
Yeah.
It was more than most people make in a year. I was thrown out the window monthly. And gosh, so yeah, I mean, some things you can't control, but like,
but you got to problem solve them. You got to problem solve it, right?
Problem solve.
That's the big thing. And having the information and being able to process it to be able to come up with a good plan for the team.
Yeah. So that's what I wanted to focus on is the problem solving. I think that the only thing that helped me, because there were times where I couldn't sleep at night, straight up.
Same here.
But I think what helped me was, I can't remember where I heard it, but it was like basically really, you just have to take, like I found peace when I had control. And the only time I had control is when I literally just was like, because I think I realized that like giving up was going to be more painful than whatever I had to go through to figure it out. So I was like, failure isn't an option. I have to, and I just sat down and you don't want to think about it because of how painful it is, but it's almost like you have to think about it because of how painful it is. You have to keep yourself in that boiling water as the tea bag, and you just have to keep dunking it in there and be like, figure it out. And so I just like started writing down every single possible strategy. Like who could I raise capital from and sell my own shares? Who could I do this? Who could I do this? And, fortunately, we had a ton of equity that I could tap into and sell because it was just me and my parents owned 80% of the deal. So and we had one executive director partner as like the asset manager basically. And that was it. We had no outside investors. So I had all, I could like basically, I did like a reverse syndication. I started selling my shares after we closed.
Wow.
And so I was able to do that, but I had to ensure that there was progress. And there, and now just had another round. And this was the one where like I raised 3 times more than I even needed to or wanted to or asked, because people are like pumped about the story and things are working out. So it's almost like your hero story can be your selling point.
Yeah.
You getting out of the ashes. And actually the bank that I'm going to refinance with, I had to tell, they were like, well, why don't you have a stable last 12 months? I was like, because look at our story. And then I wrote it that way. I was like, our story should give you more confidence in us that we're still standing than somebody that just has a chill 12 months in their back rearview mirror.
Exactly. Exactly. You're right. And you really do. It means more when you have the story because people really feel it. They know what you've gone through. And my role now has been to help folks, to teach folks, to show folks how to do this and educate them with what's out there, which is book smarts, but then walk them through the street smarts of the lessons learned and the sleepless nights and the days where it was just like, man, this is never going to end, and just, really focusing on how to get through it. Because when you have those 6, 7, 8 years of greatness, you're falling asleep at 200 feet flying the aircraft thinking nothing's going to happen. And then all of a sudden, bada boom, the autopilot kicks off and you're like, holy crap, I got to fly now, So yeah, it's really
you got to stay ahead of the aircraft.
That's right. It's very surreal. Yeah. So that's really
awesome.
Important. Good stuff.
Yeah, gosh, so many relatable moments. So many, your story, I think, and just persevering, getting through those challenges is going to help a lot of people think through. Maybe you're in the middle of something, guys. Like you're listening to this, you're like, maybe you're in the middle of something. Just keep, persevere, as John said, or at least just understand that this is just part of the game. And honestly, like John said, he wouldn't trade it ever because you making that your hero story is going to be an extremely proud moment for you. It's like getting through boot camp. It's getting through anything that's difficult. Let's just talk about one last thing, and I'll let you go, John. I know.
This is great. Time flies when you're having fun.
Yeah. Let's talk about if somebody's listening to this and they're like, they want to go all in. Yeah. Right. I'll just do a quick shameless plug on like how we approach it. And I want to hear what you would recommend somebody do.
Sure.
Because I know you have a wealth program and you got a lot of stuff going on. And maybe you just have some pieces of advice. But so ADPI, I already told you, we approach things from a conference perspective. So the first thing we do is we help you identify what you want to do, and how to build your team. And then we focus on the actual meat and potatoes of the business, like how to put a deal together, how to find a deal. And then we focus on raising money. Because in my opinion, if you got a team, you got a deal, raising the money's that much easier,
Yep.
right? And so for example, we have this program we call our cohort. So it's our military multifamily academy and cohorts, where we bring 16 people in together. They go through it's now up to 14 weeks. It's like a college intensive. Like you go through it together, and the whole point of it is you figure yourself out, you build a team, you shadow, we go through like a mock process of going through a deal where you shadow what the events were in your role. You figure out the deal, you learn how to raise money, you learn how to pitch yourself, how to tell your story, and then you start putting in LOIs, like offers or letters of intent, before you even graduate. Actually, just last week, one of our members got an offer accepted, and it was their last week of the cohort. Like that was the point, right? And so, if anybody's listening, you're like, I know I want to go in on apartment complexes. I want to be somebody who's a part of a team, builds a team. You can go to activedutypassiveincome.com/strategy. This is our kind of like our like premium. Hey, I want to do this after the military or during, and whatever. This is how we approach stuff, but. John, is there anything that helped you or that you would like to impart to somebody, like if they're trying to figure this out, or maybe they just have $50,000, or maybe they are the type of person that wants to go in? Like how if you had to just sit somebody down and be like, this is what I'd recommend.
Yeah, I would sit down and start out with what is the most important thing for you right now? What do you want to focus on this year, right? Let's put it in concrete. Gary Keller calls it the GPS, goals, priorities, and strategies, right? So like, what do you want to do this year? Like, yes, you have your big dream of being this multi-billion-dollar developer, sponsor, whatever, syndicator, whatever you want to do. And he calls it the one thing. And what he says is, if you could do this one thing, your life's going to be a lot easier. And it could be a one thing for your personal life, your health, your family, your faith, your business. Sit down and really just say to yourself, what's the one thing that if I do in this area is going to make my life better, easier, more purposeful? The Simon Sinek why, like this is going to make me feel like I am doing the thing I am meant to do in this world, in this life, right? So that's like the big picture goal. And then just sit down and chart it out. For me, it's, have a goal. And then what are your 3 priorities that are going to help you get to that goal? For me, it's always education and coaching. The second is financial foundations. And the third is investment diversification. So for education and coaching and mentoring, ADPI, become a member. 3 books that I would say people have to read are How to Win Friends and Influence People by Dale Carnegie, Tribe of Millionaires by Chris Osborne and Pat Haban, and the third one will come to me. Thing by Gary Keller. Those 3 books are just
The one thing.
must reads, because they are just really going to help you. And in Gary's book, he talks about time blocking. And time blocking is where you sit down for X amount of hours a day and focus on your goals, priorities, and then the third part, strategies. So when you have those 3 priorities, now you've got tasks that you're building to each of those priorities that are aligned to accomplish your goal. So that's like a good roadmap. And why do I like that? Is because it focuses you. It doesn't have you running around like this in a crazy bunch of areas. You are focused. And you're devoting time each day at time blocking for each of those things that are going to help you achieve that goal. And your life's going to get better. You're going to feel better. Maybe it's lose 10 pounds. Maybe it's I want to grow my net worth by 10% this year, whatever it is. And those things will put it in shape. And part of that is having that team around you to help you. Everybody wants to have 50,000 to invest in a syndication. My question to them is, are you maximizing your Roth IRA? No, I don't even have a Roth IRA. Are you maximizing your insurance cash value investments? No. Well, why are you wanting to live in the penthouse when you don't have the foundation of the house or the basement built? You've got to have that built first. Or, I mean, if you're maxing out your Roth and you've got the 529s for the kids and you've got the house payments, and then all of a sudden this money's still coming in and it's just sitting in an account, yeah, now you're ready to start maybe looking at some alternative investments. But don't
so have a good
foundation.
Yeah.
Education and financial foundations are so important. It's just like anything. You and I wouldn't get into an aircraft unless we did our pre-flight. We checked everything over.
Right.
We got with our team. We did our plane side brief to make sure that the tactical coordinator's ready, the radar guy's ready, everybody's ready, the team's good. And then as the plane commander, you're like, let's go, we're doing this mission. That's what you need to have.
Yeah. Gosh, I think that is fantastic advice. And actually my financial foundation was what saved me when things got bumpy on the way out of the military. when some of this stuff, having to fire my property manager, having to completely revamp how my apartment complex that me and my parents owned together was running, had to find new contractors and re-permit stuff with the memory care facility. All that stuff put a lot of financial things I was expecting on hold. And so because I had a good foundation, I was able to continue persevering.
Amen.
Otherwise, I was thinking hey, we might go have to live in my parents' basement for a while.
No, yeah. It's important. And the last thing I'd say too, to add on, is take some time for yourself too each day. Like I've got a dog I love, a son, and I love going out to take him for a walk. I mean, it's going to be 72 degrees here today in Virginia. I'm going to go out and take my dog for a walk. I'm going to play with him. I'm going to have a good time with him, because that's going to put me in a better spirit, and I'm going to be ready to tackle my next big tasks. If you're around the clock at the computer and not taking advantage of the time you have to do stuff, work out, hit the gym, go for whatever it is, or just sit down. My pre says, sit down for 10 minutes and do nothing. Just sit there and just look outside. Maybe you notice the trees. Maybe you see a cardinal fly by. Again, being a faith-based person, I just connect with the Lord during that time. I just try to listen to him in my heart and ask him what he wants me to do. It's great to do that. And we need that. We need that. Otherwise, we burn out.
Yeah. Mental health is no joke. Yeah. Burnout is a very real thing. So, gosh, John, it's been an absolute pleasure. Is there any saved rounds, any last thing you want to tell your people about, whether they want to get in contact with you or something
definitely.
Like that?
I mean, first and foremost, I'm always available. So I'm on LinkedIn, I'm on Facebook. Our website for JID Investments is jidinvestments.com. And I'm also part of the KW United brokerage here in Northern Virginia, providing wealth building training to our real estate agents, but also anybody that wants to learn about passive investing in real estate. So reach out to me. I'm happy to do I can jump on my Calendly. We could do a 15-30-minute call and then find out how I can help, or if you got questions where I can help point you in the right direction. I'm always available. Just like you, I'm sure we love to give back to people that are getting into the business, learning, and just want to grow and understand how to do this. Happy to do it.
Awesome. John, thanks again. Guys, you heard it, JID Investments. If you want to talk to John, if you want to be maybe one of his limited partners, obviously he's got a solid gig going, and he's seen a bunch of not so great moments. And so he definitely has that experience, and he knows what to look out for. Thank you for helping educate our military community on our mission to impacting 3 million military families, past and present. It means a lot. So everybody, like, subscribe, share, what all the cool kids do. Thank you for supporting our mission to help impact those 3 million military families. This was the ADPI podcast. I'm signing off. See you later, guys.
Take care.